Okay, James, one of the questions we get a lot from people is what's the lowest down payment possible that I can put on my mortgage? What options do people have?
It's a good question today because most people, they assume that they have a low down payment and they have to go for an FHA loan, which is a very good program. It allows for you to put as little as 3.5% down. But over the last couple of years, there have been some very good conventional programs that do allow you to put as little as 3% down, specifically the Home Ready program under Fannie Mae and the Home Possible program with Freddie Mac. And the advantages there is that FHA requires that you pay 1.75% upfront annualized mortgage insurance financed into the loan, and the monthly mortgage insurance is for the life of the loan. Home Ready and Home Possible do not have the upfront mortgage insurance, and the mortgage insurance, once you reach 22% equity, will drop off. And so for the longer term, or the cost of money, as when we talk about a term like APR, which many of us know, the APR on those conventional programs are much lower. So if you have good credit, but you only have a small down payment, I would absolutely look at those programs over the FHA as a first choice.
So between conventional and FHA, you have 3.5%, maybe 3%. How much are we adding on for closing costs as a percentage of the loan?
Typically, closing costs, if we're talking closing costs and then those prepaids and escrow, I'm going to say roughly about 3% of the purchase price is what it's going to cost you between those two things. Now, the escrow is your money. If you sell or refinance or pay off the mortgage, you're going to get that money back.
So 6 to 10% total at the lowest of the purchase price?
Yeah, that's a good, absolutely. Yeah,
Okay,
about
so
6 to 8% total of the purchase price is what your investment is going to be into that loan. Now, you could get a seller's concession
right.
for closing costs. On the conventional programs, when you're putting less than 10% down, you are limited to 3%. FHA is a little bit more advantageous there, that will allow as high as 6%. So if you don't have the extra money for closing costs, you may look at the FHA as an option, because let's say, for example, you're buying a $300,000 house. Conventionally, you could get a $9,000 concession. So let's say you're in an area where taxes are higher, maybe your closing costs are 12 or 13,000. With that escrow, FHA will allow you to ask for that additional concession from the
Great.
seller.
So on a $300,000 house, you're thinking maybe 6%. That's like 18,000. Can you
Yep,
get a concession for?
for the closing costs, the 3% of it.
Right. So that cut it almost in half down to 9,000.
Absolutely. Your only investment would then be the down payment.
All right. So at the end of the day, though, the best way to know is to just talk to your realtor and your mortgage professional. Try to get an estimate.
Yeah, especially if you have better credit, the conventional programs make a lot more sense, because FHA is basically just an insurance company under HUD, and their premium is based off of the program. It's not driven like in the PMI or the private mortgage insurance market. The two main drivers there are the loan to value and FICO score. So if your FICO score is really less than 680, then the FHA is probably going to be the better option. But if you have 680 plus credit, those Home Ready, Home Possible programs are definitely the way to go.
Great. So if somebody wants to know about that, just call Bond Street Mortgage, right?
Absolutely, yeah.
BondStreetMortgage.com, BondStreetLoans.com,
Absolutely.
and we'll put the number somewhere near this video.
Sounds great.